RISKAFRICA TV is coming to you from Sun City, and I'm joined now by Caroline de Silva, Deputy Chief Executive Affairs at the FSB. We've had a really interesting afternoon, a very strong focus on regulation and the regulatory environment, and Caroline's been participating in a panel specifically looking at regulatory issues in the country. We heard it from Rachel Best of PwC earlier today, and she was talking specifically around RDR and the comparison with the UK model versus our own implementation, and raised the point that in the UK it's been hard to really measure how consumers have in fact benefited, and that it's a difficult question to kind of give us a solid answer to. What's your comment around that, and how would we do things differently to improve that?
Okay, so I think when Rachel was talking about measuring customer outcomes, she was talking about qualitative issues. And RDR in the UK is quite new, so it will be hard to measure. I think what we need to do, though, is put some quantitatives in place to measure customer outcomes. So if we're talking about, has RDR delivered the benefits we want, we'd have to look at the number of complaints, how those are resolved. Are complaints reducing? Are they being resolved more quickly? Are we getting the complaints data? Has the complaints to the Ombudsman increased or decreased? Or has the overturns by the Ombudsman increased or decreased? We'd have to look at policyholder units or policyholder numbers in terms of numbers of customers in the industry. We'd have to look at things like retention. Are they staying longer? Are they lapsing their policies? Are they cancelling? Because cancellation and lapses will be indicative of their faith or their confidence in the industry. So we'd have to really think about, from the industry's perspective as well as ours, what measures we put in place to really measure whether outcomes have been achieved.
So staying with the topic of the consumer, it was also a key theme of the discussion, and the point was raised of sort of, you said very strongly that the consumer is front and center in these changes and in the regulatory reform. But how engaged is the consumer in this process, or how much of a part of it are they? The question was asked, has anybody asked the consumer what they want, or whether they're seeing improvements? What are the platforms that, how is consumer engagement happening? What are the platforms that make that possible?
So I think there is a gap. I think there is a gap, especially with the regulators' engagement with the customer in terms of the formal engagement. So we engage very easily with the SAIERs of the world and their CSIS and so forth, because they have formal platforms. But we have to find a way to allow the consumer also to become more formal in terms of the engagement with us, because I think that's lacking a little in South Africa. However, that does mean to say that consumers haven't been asked. I know that Michelle Best wanted to put her hand up and say, we've engaged the customer. They've done significant consumer focus groups, the outcomes of which they share with us and with, of course, people who buy into the research. And that's been quite extensive. So there are these kind of consumer research that go on. But I think the response of the regulator to the consumer is one that's based on what we see every single day at the regulator's office, what kind of complaints we're receiving, what kind of abuses we're receiving, what kind of things customers want, the social cynicism measure. But I'd like to see a more formal platform of engagement with the consumer on regulation and regulatory issues, so that their voice can be heard just as loudly as the insurance industry's.
Many of our viewers are from the intermediary space. What is your comment around the concern that the RDR is going to put pressure on income, on remuneration, and is going to stifle innovation, and the concerns that are raised quite regularly around that?
So I think if we start with looking at the UK outcome, because it was part of the topic today, you'll see that advisors' profits increased by 36%. And the general trend across the UK was that product prices have gone down. The cost of product to the consumer hasn't gone up, but the advice fees or the income of the broker has gone up. And I think that's a natural consequence of the value of advice no longer being hidden in the commission or the sale of the product. And I think that's a very important thing, because Jonathan said it on the podium today as well, is that RDR is about not just about the consumer and advice. It's about the sustainability and the access of advice. And if you think about who gives advice, it's the broker. So if RDR has the interest of the sustainability of the access of advice at heart, then it obviously has the interest of the intermediary at heart as well. As long as they are able to demonstrate their value and are acting in the best interest of the customer and not the best interest of their pockets, which is where the conflict of interest issues come in.
Even though in the long run the idea is that it will protect the consumer, is there not concern that at the outset it may disadvantage or limit financial inclusion? It may be a challenge for financial inclusion.
We need to look at the uniqueness of South Africa when we look at RDR. So we have to understand that we have a different demographic to other countries where RDR has been implemented. And RDR specifically recognizes that the entry-level market may be easier to access if you continue with a commission environment. And that's the same in the investment space. In the short-term insurance space, it'll be commission as usual. So it'll be as and when, commission always where it used to be. The only difference is the level of commission may come down a little to include the advice portion. So I don't see brokers being any worse off than they were before. The biggest change comes for the life industry, where we change the mix or propose changing the mix of commission so that no longer is 100% paid up front, but 50% is paid up front. And that's very deliberately to achieve better customer outcomes on returning or churning of business, replacement of business, and the practice of living on a cash basis for the business. If you don't live in a cash business and you have an equity or an annuity come into your business, the business becomes more sustainable in and of itself, because the broker doesn't have to go and seek a new customer every single month to make a living because they've got annuity income coming in. So it looks at the sustainability of advice. For the short-term industry, it's commission as it was before. In the investment industry, it is fees, but for the entry-level market, in the interest of acknowledging the differences in that market, commission will still be allowed.
Thank you very much for your time.